After a volatile battle over the 200-week simple moving average, Bitcoin managed to print a bullish weekly candle over the weekend. Is this the start of a new 60-day cycle that will send us flying above the $30,000 level?
This is awesome. Bitcoin pumped after a deal was struck to raise the debt ceiling.
Be careful, Degen James. Now that a future event is certain, markets may have priced in the future vote in advance.
Are you saying Bitcoin may drop back down?
I'm going to do a multi-time frame analysis on the weekly, daily, and 4-hour time frame to get a sense of direction for the rest of the week. The weekly time frame is in a bullish uptrend. You can tell because the floors have been rising higher and the ceiling have been rising higher as well. So if I pull out the pitchfork, it'll be more obvious. What's interesting about this channel is that it rejected from the top of the channel and pulled back all the way down to this median line, which has confluence with a 200-week simple moving average. The bulls are going to look at this and think that this could be a potential bull flag. But I have my concerns about it just because the flagpole had this impulsive move up, but then it chopped sideways for several weeks and then went volatile for this potential flag formation. When you compare that to the previous flagpole where it had this impulsive move up, some decreasing intensity in its move, and then finally a sideways consolidation before it popped back up, this is a little bit different. I don't like this consolidation area right here. So this leads me to believe this may not really be a flag, but more of a downward channel. Now taking a look at on-balance volume, we can see that it is above this bullish breakout consolidation zone right here. So the effort does support the result of price being above the 200-week simple moving average. One thing to note is the on-balance volume is rejecting from its 21-unit simple moving average, which is not that big of a deal because as price is ranging sideways, volume tends to decrease. But should this pop above this little channel right here, I would expect volume to follow through and pop above its 21-unit moving average as well. Now taking a look at the MACD indicator, it confirms that the trend has been slowing down. It went from range expansion now to range contraction. The histogram hasn't flipped bearish just yet, so the bulls are hoping for a sideways consolidation before the next leg up. But should the MACD flip bearish, it could result in several weeks of a continued downtrend. Now flipping over to the daily chart, Bitcoin did do a golden cross earlier in the year where the 50-day simple moving average crossed above its slower moving 200-day simple moving average. So technically we are in a bull market. But recently what has me concerned is that the 50-day simple moving average originally provided support, but now it's creating resistance. What the bulls are hoping for is that this is a bull flag where there was an intense move up to this dynamic level of support and resistance, and it's now flagging where the price is in an equilibrium where forces of supply and demand are equally balanced. But because of this previous price action, it may give it enough energy for forces of demand to overcome supply and pop above the 50-day simple moving average. So what bulls are hoping for is, here's what everyone's talking about, is this head and shoulders reversal pattern. What bulls are hoping for is that we take out the right shoulder at the $30,000 level and start the new 60-day cycle. I'll get back to the 60-day cycle in a moment, but first I want to talk about the on-balance volume. As you can see, it is above its 21-unit moving average, and it did pop above its last point of support, so that is bullish. But it is entering this resistance line right here, where previous support may be flipping to resistance. What's positive is that on-balance volume is above its 21-unit moving average, and it's above its last point of support. But previous support may now flip to resistance, which seems to have confluence with the 50-day simple moving average. Now looking at the stochastic RSI, we can see that the momentum is strong. It's above this channel right here. And if the moving averages turn over and drop back into this channel, just like it did in the past, that could confirm the top of this move. But it hasn't done so yet, so there is still some hope for the bulls. Overall, the indicators do support bullish price action on the daily time frame. In summary of what we looked at so far, the weekly and daily charts do appear bullish. Here's my cheat sheet for the triple screen trading system. So the weekly chart, which is known as the tide, gave us a direction of the market, and I believe that it was bullish. The daily chart, known as the wave, was more of the current. inside of the tide, and that gives us a sense of the short-term direction, and that was also bullish. So here we are on the 4-hour chart, which is the ripple. This is where we look to take action, and because they were both bullish, the weekly and daily chart, we should technically be looking for a long entry. So is there a good long entry looking at the 4-hour chart? Now taking a look at on-balance volume, it immediately feels bullish because it's above its 21-unit moving average. Because it's above its 21-unit moving average. Volume did re-enter this equilibrium that it had previously dropped out of. Now when we take a look at price, it also was in an equilibrium, but it managed to pop above it. As price has been moving higher, volume has been trending lower, creating a bearish divergence. So this has me concerned that this might be a bull trap because the effort used to produce this result is not consistent. Now taking a look at the relative strength index, we have been overbought, so a bullish entry is risky at this point. And we may be seeing a little bit of a bearish divergence, where price has been relatively flat up here and the RSI has been trending lower. Unfortunately, on the 4-hour time frame, I'm having trouble finding a bullish entry. Ideally, I'd like to enter when the 4-hour RSI was oversold. So that would have been, this right here would have been your bullish entry. But now that we're oversold, I'm having a little bit of a concern, especially with the volume. Now, stepping back to the daily chart to revisit my bullish bias, I have to say we are below the 50-day simple moving average. So if we pull out the Fibonacci retracement tool, we can see that we're rejecting from the 0.236 level. So that is a confluence where bears may be looking to short. And if you're trend following, you can actually see that we are in a daily downtrend where the ceilings have been falling lower and the floors have been falling lower as well. This is more obvious if I pull out the shift pitchfork, where you can see that we are rejecting from the top of this channel. So there's several factors here that are not looking too positive. In order for me to consider a high quality bullish entry, 3 steps need to happen. First, price needs to get over its 50-day simple moving average. Second, price needs to close a candle above the 0.236 Fibonacci retracement level, which is an invisible area of support and resistance where it happened to be previous resistance in the past. And third, price needs to close above this downward pitchfork channel, which price has been rejecting from. Once those 3 conditions are met, we can start to look for a long entry on the 4-hour time frame and put a stop loss below this daily consolidation for a 3-to-1 risk-reward ratio. In regards to market cycles, the bullish perspective is that Bitcoin is moving in 60-day cycles that are right translated, where there's more time spent moving the price up and less time declining. And bulls are hoping that this wick down here was the start of a new 60-day cycle that could be right translated. But the bearish scenario is that we could be in shorter 45-day cycles that are left translated, where at the start of a bearish cycle, there's an exciting move up, but overall more time is spent declining. And I would be looking for a bottom formation somewhere around the next 7 to 10 days. I would love to know what your thoughts are in the comments below. Plus, I'm looking to accumulate a few meme coins in the future, so I'll be doing technical analysis on those. And the monthly candle is going to close in the next day, so that could have a huge impact on the way the weekly and daily charts look. So please subscribe to this channel if you want to keep up to date on my thought process on the charts.